the CEO founder of Developer Capital. This is Max. He's my co-founder. We've also been friends for 17 years, which is quite relevant. So look, I think a lot of what has been said today really resonated with us. It's going to be relevant to our story. We launched about a year ago, so I think that makes us the babies in the room. We had support from Urbana Corp, Mr. Caldwell and Tom, who's here, and they were really our cornerstone investors, and we've accomplished a lot in the last year. So I think the goal today is really just explain who is Developer Capital, what is DevCap, what's it about, where does our edge come from, what have we done in the last 12 months, what are we going to do the next 12 months, and because we're an AI-focused investment corp, obviously we have to talk about AI trends today. Yes, we will have time to talk about DeepSeek. We could go into Q&A. And yeah, we think it's just a very exciting time to be in the space, which is why we entered it. So why does DevCap exist? I think to explain this, I need to tell my backstory a little. So I was a portfolio manager, a public markets portfolio manager for 12 years, fundamental bottoms-up equity research at two separate firms. And about 2 years ago, I was at Guard Capital. Some of you may know it. It's a long-short hedge fund based in Montreal. And I saw ChatGPT come out. It was December 2022. And for me, my mind was blown. This was a moment I'll remember. And it felt like seeing the internet in 1995. And I felt like this is going to be the thing for the next 25 years. So who do I know in the space that I could trust? It's my friend Max. I've known him for 17 years. He's a machine learning engineer since graduated 2010, been working in the field since then. So I went to talk to him. And over a series of conversations, lunches, he convinced me that this is not just some hyped trend. This is real. The industry, which he'd been in for some time, hit a tipping point, and it's just going to keep accelerating. So I realized I need to do something. I can't just look at this opportunity and pass it by. So I quit my job at the hedge fund. I came to work with Max at his firm called Monadical. It's a software consultancy. They have a team of 20 engineers. And I used that structure to launch Developer Capital. So what we realized looking around is, we want to invest in these early stage companies. And again, back to the portfolio manager job, I didn't want to wait 5 or 10 years until these companies go public at $10 billion. I want to find them at $5 million. So how can we do that? And we looked around the space, and we realized at the earliest stages that we're talking about, pre-seed and seed, so a lot of these companies, they're only 6 months, 12 months old. What these founders really want is investors that are more than just a check. They're investors that understand what they're building, know how to build it themselves maybe, and can really support them on the journey, someone they could talk to about this stuff. And that really just didn't exist. And on the investor side, rather than a traditional VC setup, setting up a 2 and 20 fund, GPLP structure, we realized that actually creates a lot of disalignments and a lot of artificial rules that don't really make sense to us. They don't maximize returns. So we set it up differently. We set it up similarly to Urbana Corp is. It's an investment corporation, which is why we spoke to them. And the goal is to invest in pre-seed and seed stage AI companies, eventually get a portfolio of these, 15 to 20, we think is the right number. Last year, we invested in 6 of them. And similarly, we structure this to have no pressure, so we can actually make good decisions. So there's no management fees. There's no 2 and 20 model. We have shareholders. We sold shares to our investors, and we paid ourselves for doing all the work for the next few years, at least, in founder shares, like a startup would. We took founder shares. There's no cash going out the door for management fees. So this gives us time to execute on our vision because there's no burn, and it creates alignment because our main driver now is not just accumulating AUM. It's now that we have these founder shares, let's get these shares, price per share value, as high as possible. And the final thing we thought was interesting with this structure, and maybe Raj could confirm, but I personally feel there's appetite in the market for early stage AI investments, but there's no way to do it. If you go to your investment advisor and say, hey, I think AI is real, I want exposure, like, great, let me buy you Microsoft and NVIDIA. Like, well, I don't want something that's 3 trillion, where's it going to, in market cap, where's it going to go? I want something that could 10x. This is, I want to take a shot at this. So we think an ability to invest in a portfolio approach of investing in 15 to 20 of them, vetted by a team that actually knows what they're doing, and if it's publicly traded, gives you liquidity, so you're not trapped in for 7 to 10 years. We think that's an interesting exit possibility for our early investors, but also just a way to continue and keep it going. So I gave my brief background here. I think really the special sauce is Max on the tech side and the engineering team behind him. So I'll let him explain and introduce himself.
I'm Max. Met Jordan like you said, 17 years ago, back we were both online professional poker players in a past life.
During McGill, while I was at McGill.
He went into finance. I went into software. I did a dual degree in comp science philosophy with a specialization in artificial neural networks, which were kind of a niche thing back at the time, but I was really interested in them. Obviously, that field has grown a lot since then. I started a software consultancy in 2019. We do a pretty broad variety of things, but obviously with machine learning kind of baked into my past, we've done a lot of that work. That has really crescendoed over the past couple of years. And obviously when Jordan came to me with his, I'm not sure what I want to do, but I can tell AI is going to be big. I said, sure, join the team. We'll figure it out. And Jordan figured it out. He said, we're gonna start this new company. It's going to be called Developer Capital. I said, you know what? When I was fundraising for my first business, it was miserable. Nobody I talked to knew anything about what I was doing. I was talking to a bunch of people from the finance and MBA world. I was trying to, I was an engineer. I didn't know how to speak their language. Everything that I said fell on deaf ears. I didn't know, I didn't know what I was doing basically, and they didn't understand what I was good at. And so I thought, this is something that we can do that's different, that I think a lot of early stage, more technical founders would find interesting and be attracted to. I'm also, I guess, kind of informally advising a lot of startups day to day. Jordan saw that and was like, why are you not investing in the good ones? And I was like, I don't know anything about investing, that's why. So that's kind of how we got here today, I guess. Here, you hold this. I don't know what I'm doing.
So I think the strength is that we bring in our advisors and we bring in the engineers that Max has assembled into our investment process. We go through the weeds. We actually go, in the tech stack. We see how everything works before we invest. So we have a great team that helps us. These advisors. You want to talk about them?
Sure. Yeah. So Laura is a longtime friend of mine. She was, when I met her, was running a custom wallet company that got featured in the Guggenheim, but she was broke and wanted to do something that made more money, so switched to tech. And then like 2 years later, she's a VP at Airbnb, really, really brilliant engineer. When they went public, and also she was involved, let's say, in Solana at the beginning, she switched to doing more investing and runs a clean tech investment fund called Electra, which has a couple of companies that are, I guess, it's like semi-managed by them. Brilliant and well-connected, and based in SF, we really felt like we needed an SF presence to be taken seriously, and to get ears on the ground. Our shadow investor there is also a longtime friend of mine, but she didn't want to be publicly visible on our advisor list because of potential conflicts of interest.
She works at a very large New York-based bank and decided it's better to beg for forgiveness than ask for permission. So,
so she's the head of the blockchain division at one of the major banks in New York. She's actually the one who introduced me to one of the most interesting blockchain projects that I've ever seen, which was this DAO stable coin system, which is using like collateral debt applications. Anyway, I'm not going to get into the details of that. Brilliant, runs a bunch of very technical meetups in New York, is a great source of leads for interesting companies to invest in. And then our team is super technical, except for Jordan. Jordan brings the like actual investment knowledge, but we felt like we needed somebody who understands go-to-market and marketing and operations, because that's really like critical to early stage investment. So we brought in Greg, who's also a longtime friend of Jordan's, who launched, he was a very early Uber employee, launched Uber in France and then Uber Eats in Canada, and now is a VP of operations at Nesto. And he's the guy that we bring in when we have questions about, can these investors execute on like building a two-sided marketplace, which is, that's a whole separate, non-technical but very critical, important piece of building a business from the early stage. So because we're kind of weird, monadical, the software consultancy that I run is a major shareholder in DevCap. Monadical effectively offers like free services to DevCap in exchange for those founding shares. And what that means in practice is, we bring potential investments to my engineering team and ask them to check it out. Sometimes they'll like use the product. Sometimes they'll do like technical assessments of the code base. Depends on the case. And then also we make our engineers available to the people once we do invest in them to say like, hey, you're only a team of 3 people. If you need a security specialist or a hiring specialist, a recruiting specialist, somebody who knows a piece of your business really, really well, you can come talk to them for free. So they have kind of like a panel of technical advisors through our consulting agency.
And honestly, I think something we didn't put on the slide, but the most interesting part is because we're engineers and we have this team of engineers, it's really helped us win the most competitive deals. There's been a few deals we did in the last year that were 2, 3, 4 times oversubscribed, and we got full fills. And the reason is the founders wanted to deal with us. So that's what we're just going to do a quick review of what we did in year 1. We closed our initial funding in Q1 last year. The focus completely switched from setting up the structure and fundraising to setting up deal flow pipeline. We're only going to invest in maybe 1 out of every 100 companies we look at. So you need a really big top of funnel to actually get those companies through the system. So we spent a lot of time doing that. Most of our companies we look at come from referrals from founders, former founders, people in Max's tech network, and it really helps differentiate us and get us in front of the right deals. And like I said, the 6 we made, 3 or 4 were oversubscribed. So right now we deployed 47% of the capital we raised. The remaining is sitting in a GIC. I locked in at 5%, so good for me. And this is the breakdown. I think, again, we expect to deploy the remainder in the next year and get to about 12, and eventually come back and raise a bit more funds at a higher price per share to keep it going. So more interesting, I kind of just want to talk about 3 of the 6 we invested in. It'll give you a bit of a better flavor for what we're looking for and what we're doing. The first is EdgeScale. They came out of stealth, I think it was October 2nd. I saw the press release. They came out, it was in partnership with Palantir. They have a very deep and thorough, I guess, partnership or contract, if you will, where Palantir is going to be effectively their sales force, and EdgeScale will be, getting revenue directly from Palantir. But the partnership launched with very high minimum revenue guarantees for 5 years, and that's not really normal. You don't really see it in the startup space. So we spoke to the founder. We realized these guys are incredible. If you look at their CVs, like we never thought we would, having just started, be able to access amazing founders like this. Their CTO, McCrea, he was effectively COO of Nokia for a decade, and before that, chairman of Alcatel-Lucent. These are network people. These are hardcore network people. And what they do is really take cutting-edge network gear and infrastructure, put it on the edge, so in your factory floor, and bring the dream of IoT to life. We've all heard of IoT. There's a lot of public companies that claim to do IoT. But in reality, you can't run the cutting-edge software from the cloud on-prem, on the factory floor. The hardware is not good enough. The latency is too long of getting the information up and down, and it hasn't really worked to date. So these guys went out to solve that problem. They have the right backgrounds. They spent a year doing it before coming out of stealth, and that's why they're partnering with companies like Palantir. Palantir needs them to sell into, let's say, Honeywell's on the floor. Palantir already sells to Honeywell. Honeywell says, we need you on our factory floor to be more efficient. Palantir says, well, we can't really do that. Well, now they can. So they bring EdgeScale behind them. Palantir could then sell. Honeywells of the world get what they want, and everyone's happy. So why did they choose us? Like this company, they're going to do an up round, in my guess, sometime around April, maybe May, to a substantial valuation lift to what DevCap invested at. It's because they could communicate engineer to engineer. I spoke to Brian after we invested. I said, why us? And the big reason is, Max can talk to them on an engineering level. He understands this stuff where almost no VCs at our level do. We have connections in the tech industry, specifically for this deal. We have connections to Palantir. They view that as attractive. And we moved quickly. Mr. Caldwell joked about being able to execute a deal in the boardroom that day. We closed this deal in 3 days. And it was quite the process. I was in San Francisco to see tons of companies. I had to cancel every meeting and get this done from my hotel room. So they're doing great. That's just one company. Another one, this is actually Toronto-based. I'll let Max speak to them. This was the first one we did last February.
Yeah, so these guys, what they're basically doing is they're abstracting away the process of connecting to other online services, so APIs. If you're a business that's working with another online business, you're working with them through this interface, the application programming interface, right? That's a major pain point for basically every engineering team. From my consulting background, at the very beginning when we started out, when we were cutting our teeth, doing a lot of API integrations because it's boring, annoying, finicky work that no engineering team wants to deal with because it's not part of the core product that they're, the vision that they're trying to build into. It's like this ancillary thing that's annoying. So these guys are, they specialize in basically designing a bunch of API integrations into a bunch of different products and then abstracting that away so you connect to their API, and then through their API you get connected to all these other ones, right? We saw this and we were like, you know what, this is an AI play. The reason being that AI companies are going to increasingly be connecting to each other programmatically through APIs, right? And so as demand for API integrations go up, sure, the costs are going down, and in fact, that's one of the things that these guys leverage is they've got a pretty neat system for integrating new API endpoints into their system using language models. But the costs of doing those API integrations are going to go down, and simultaneously demands is going to skyrocket. So the existing players that are out there, the existing SaaS solutions are going to be cost ineffective compared to these guys, and also demand's going to go up like crazy. So we saw this and we said this is the type of business that probably is going to really thrive in an environment where where AI is really growing. So this is a nice slide to show, like, just to give you like an intuition. If you're trying to build a system that involves communication, right? Communication online, you can connect to their API and now integrate with Gmail and Teams and Slack and Discord all at the same time through one integration, rather than having to like deal with the like finicky details that are different from each one of these. And so yeah, you could talk about the financials.
Sure. So we invested. It was like the tech had just been finished. Very few customers. Today they're finally starting to click. Over 50 paying customers. Revenue is now growing 25% month over month. The burn is being well managed. It's decreasing as a percent of sales. They got runway into 26, so not a problem. And speaking to the founder, they're going to do an up round from where we invested, a full seed, sometime in Q2 and Q3, and I think that's going to be a trend in all the companies we invested in last year. And I'll go through this quickly, this last one. So Mycroft, again, Toronto-based company. I just caught up with the founder, Mike Kim, last night. We had dinner. If anyone in the room has gone through SOC 2 compliance, you realize how annoying and painful it is. Ton of documentation, ton of senior management time. You need it, but it's basically just a check mark. They automate it. So the Vantas and Dratas of the world that say, hey, we're going to help you with SOC 2. It still takes up a ton of senior management time and resources. Mycroft uses LLMs to actually do it for you. They'll connect in all your systems, and all those documentations and notes you're missing, they'll create it for you. So instead of taking 10 months, it takes maybe 1. It's a lot cheaper, and you get your SOC 2 documentation, and senior management could go on to do other things like selling and building a business. So again, this is an ideal investment. This is what we're looking for.
Yeah, this is when we got started, this is exactly the kind of company that I was predicting that we would see that would be like major game changers. Basically, just looking through history, I did a presentation a year ago about how the rise of basically the mainframe changed aviation, because now suddenly you could book orders of magnitude more flights per day, as opposed to having like a bunch of people in a circle with little note cards, right? When you have these like step changes in the types of information that can be processed and scale of information that can be processed, it unlocks new kinds of businesses, right? And so this is like a new kind of business that kind of wasn't possible before, that is unlocked by language models, and so fits really cleanly into this thesis, which is what we're looking for.
Yeah, and they're doing great. Again, they only started selling in October, already up to 8 paying customers, targeting $1 million in sales by the end of the summer. For a company that's only now 7 months old, by then 1 year old, that's incredible progress.
Yeah,
so
and their engineering team is really sick.
Really small, quite efficient. So that was the last year. We're pretty proud of the portfolio put together so far. Looking forward next 12 months, continue to deploy the remaining funds. We think it'll probably be another 6, maybe 7 investments. Support the companies we're investing in to their next round, to their Series A rounds, help them there with mostly connections, but also on the technical side. And after that, begin working on DevCap's next round. I mean, we don't need to grow AUM. Again, there's no burn. Our main driver is to get price per share as high as possible. But there's clearly an optimal asset size. We want to be able to do follow-on investments to our best portcos. No one's going to know them better than us. So the ROI on those follow-on investments is incredibly high. So we're probably going to gear up to do a further investment and uplift to our original round. Some point, probably at the end of Q3, maybe Q4. But let's get to the more fun stuff, which is what do we think is going to happen in the markets, both public and private, in AI in the next 12 months?
You want me to talk about that?
It's your domain.
Okay, the fog of progress is like getting closer and closer to my face, so it's harder and harder for me to like stand in front of people and make predictions. But I would say a few like major themes that I think are definitely gonna hold. One is that these non-reasoning type models, like the normal inference models, the ones that you've all probably interacted with, like GPT-4 or whatever, have all sort of hit this diminishing returns point where they're all trained on the entire internet, and it seems like the cost of doing more compute cycles on the training is not providing the kind of return on investment that you'd want. And so those are like stabilizing a little bit. And I think that there's this kind of funny thing happening in the rest of the industry where people are kind of waiting around because AI is changing so fast. They don't want to invest in like operationalizing AI stuff because they're like afraid that the thing that they're going to do is going to be obsolete next week. And so I think for those inference type models, I think we're going to see more operationalization in 2025. And then meanwhile, I think these chain of thought type models like R1 that you may have heard of, or O1 or whatever, those ones are focused much more on runtime compute, which kind of turns a lot of assumptions that people building data centers made on their head. So you're going to see like a lot of cancellations of data center projects, and probably they're going to like rethink the way that they want to design them. It's unclear what the sort of diminishing returns plateau is going to be for that. But clearly, there are like major innovation spikes happening. I mean, just in the past 2-3 months, you've seen like major breakthroughs multiple times. The rate of progress is definitely increasing on the chain of thought side, but it's still not quite there. I don't think it's like ready. You know, people talk about AI agents all the time. I think the vast majority of those applications are not really production ready at this point. R1 still, you know, when you actually try to use it for production applications, it's kind of iffy. The output, it's kind of unreliable. And maybe in 2025, I think people will start to view AI-based systems a bit more. Okay, yeah. Let me I'll just finish that sentence and we'll take Q&A. Sorry. I think people are going to start to recognize more and more that AI systems shouldn't be treated the way that traditional computer systems are, where you have like a certain requirement of correctness, and treat them a little bit more like the work that you get from an employee, where you need a process around it to kind of mitigate the human error. So I think you're going to see more and more of people rethinking the way that they interact with technology from a process level inside of organizations. Yeah, so those are my big 3 predictions, I guess.
Okay, now we got time for some questions. No, nobody cares about AI, that's it.
Maybe directed for Max's comment.
Sure.
What is the fundamental learning difference between the DeepSeek strategy and what we envisaged prior to this 2 weeks ago?
Okay, so DeepSeek is not doing anything new from a reasoning standpoint. It's basically doing the same thing that the O1 model does. They just came up with 3 or 4 innovations in terms of like cost efficiency. And so what they're basically able to do, without going into too much detail, is come up with clever ways of using the hardware such that they got about a 45x speed up on like return on investment. So like I think their model costs about 1/45th of what it would have cost OpenAI using all of their traditional methodology.
For about what? 96% efficacy, something like that?
Yeah. So it's R1 is like comparable to OpenAI's O1, but was like, a 2% of the cost. And so you're seeing that in the API costs as well. So that cost savings is translating also to inference. So that obviously unlocks new use cases when the cost is so much lower. And of course they're releasing the weights, right? And that's a huge deal because if you're a business and your processes are part of the value of your business, right? If you have trade secrets or whatever, you don't necessarily want to be like handing those over to Sam Altman, who knows what he's doing with that data, regardless of what it says in the contract, right? You probably are more comfortable hosting the model on your own hardware where you know where the data is going, right? And so that's a big game changer, I think, from an operational standpoint.
How many of your investments are pre-revenue?
So I'd say we specialize sort of on that cusp of revenue. Some have just gone to market, but we're talking small, like 50,000, 100,000 annualized revenue. And the others are just about to turn on the taps. So what we like to see is the technology is pretty much finalized. Most of them have design partners that they were building this product around and iterating and getting feedback. And then, assuming there's no revenue for a lot of these, we do really want to see that you can sell. Like the founders know how to sell. There's a lot of really smart people we meet. They build incredible things. Becomes very clear very early on that they don't know how to get out in the world and actually get customers. And if you can't do that, we're not going to invest. A lot of deals die at that part of the process.
Yeah, and I think we have like a selection bias towards really technical founders, so that tends to be a common one that we see.
Yeah, thank you. So first a comment and then a question. So as lead investors, Urbana would like first dibs on your best portfolio companies. When they're ready to do a Series A, that's just
they're
a
coming.
comment I want to put out there on record. Second question, can you speak to the national security issues surrounding LLMs, large language models, and artificial intelligence, and how you see that playing out going forward in the next 5 to 10 years?
That's a heavy one. Okay, my personal opinion is that the kind of like manipulation of the information that people are receiving, right? I think this is why Elon Musk bought Twitter. I think that is a major source of power that people have been kind of maybe underappreciating. I think big tech saw what's happening in China, where that's like a major instrument of concentration of power for the CCP, and thought, why aren't we doing that? And so that to me is probably the story of 2024. I think that's how the sort of tech oligarchy took hold of the U.S. The U.S. Republican Party. That's just my opinion from what it looks like to me from where I'm standing. And then in terms of there's this kind of narrative that you see everywhere about AI becoming a security threat because AI is going to hit some sort of inflection point where it's going to be way smarter than people and access to it is going to be the only thing that matters. And I'm a little bit less convinced by that. I think that there are a lot of aligned interests to push that narrative, right? Because it encourages people to think of things in terms of Pascal's wager, and the only wager that matters is investment in AI, and therefore you should invest as much as you can in these three companies. So yeah, I don't know. Does that address the questions that you had in mind, or?
I just feel like the events in the last week will lead to more AI spend and AI arms race. And people need to secure the information that's going into AI. So if you're an enterprise, I don't see a scenario where you'd be comfortable with providing this information to a model, an open source model, even though it's open source.
Well, maybe I'll
based
take
out
this
of
one. So I think the way to think about this is the fact that it's open source is actually good. I wouldn't personally download DeepSeek on my phone unmodified because I believe the CCP will be reading everything. What I would do is download the model itself, and you could run it on your MacBook or with your own account on AWS, and then they have no access to it. They can't access that. You can change the model weights, which means make it customized to your company's data, and then you don't need to give it internet access. You don't need to have it be reachable by any way from any other company. You could keep it all internal. So what do I think that means for AI is, I said this before to someone, is remember the internet in 1995. You used to access the internet with CD-ROMs in the mail. You get 500 hours of AOL, and that's how you put it in, and that's how you get online. And there was 4 or 5 companies doing that. that is similar thinking about, oh, AI, you need to access it through OpenAI or Google or Anthropic. But now, if you have these open source models, which are almost as good, the infrastructure of AI, similar to the infrastructure of the internet, it becomes open, and you could build these great applications on top of it, like eBay, like Amazon, were built on top of the internet. And for us, we're invested in the application layer. So now, that's going to be the winners from this open source great model race.
Yeah, if I was worried about that risk, I would be using these open source models and keeping them closed behind my VPC. VPC means virtual private communication network. So VPN. Virtual private cloud. There we go. Thank you. Virtual private cloud, so that the information that's passing through the model never leaves your network.